Mortgage shock coming for millions? Hi everyone, my name is Diloshan, and welcome back to the channel. If you're a homeowner or planning to buy, listen up. A wave of mortgage renewals is coming up in 2025 and 2026. And for many Canadians, that could mean higher monthly payments. So let's break down what you need to know. So, according to a new Bank of Canada report, about 60% of mortgage holders will see their payments go up when they renew in the next 2 years. So even though interest rates are expected to slowly come down, many people locked in their current mortgage when rates were much lower. So the difference will still be noticeable. In 2025, monthly payments are expected to rise by about 10% on average. And in 2026, that increase is expected to be a bit lower at 6%. Now, fixed versus variable. Who's hit the hardest? So if you have a fixed rate mortgage, especially a 5-year term, brace yourself because your payments could jump 15 to 20% on average. And that's a big hit. And these borrowers make up 40% of all mortgages in Canada and are driving most of the payment increases. And if you have a variable rate mortgage that actually adjusts monthly, there's some good news. You might actually see a drop in your payments, anywhere from 5 to 7%, thanks to recent rate cuts. But it's a mixed bag for those with variable rate mortgages with a fixed payment, because about 10% of these borrowers could see their payments jump over 40%, while 25% might see them go down by at least 7%. And household budgets are feeling the pressure. As monthly payments rise, more of people's income will go toward their mortgage. The Bank of Canada expects the median debt service ratio, that's the share of your income going to mortgage payments, to go up from 15.3% to 18% by 2026 for those facing payment increases. And for those seeing payments drop, the ratio could fall slightly from 19.7% to 18.6%. And these numbers assume that your income stays the same. But many Canadians have likely had income growth, which could help offset the increase. And more buyers are leaning on financial help. A new study by Mortgage Professionals Canada found that 70% of people who bought homes in the last 2 years needed financial support to make it happen, either from family or other sources. So even across all buyers, 58% said they couldn't have done it without help. And the renewal anxiety is on the rise. With 3/4 of mortgage holders set to renew by 2027, many are getting nervous. 1 in 5 say they're worried about how they'll manage when their rates go up. That's why more people are choosing fixed rate mortgages for peace of mind. 68% to be exact. Still, younger and variable rate borrowers are the ones making extra payments or trying to pay down faster while rates are still flexible. So what's my final thoughts on this? Whether you're up for a renewal soon or just planning ahead, now's the time to review your options. Talk to your lender and maybe even consider locking in a better rate before things change again. So if you found this helpful, don't forget to like, subscribe, and hit the notification bell for more updates on the Canadian housing market. So, are you worried about the upcoming renewal? Let me know in the comments below, and I'll see you in the next video.